Hey everybody, welcome in. It is Options Thursday. This is going to be video number 12 of my options series, and I will add the playlist here or somewhere. Anyway, you'll be able to see it. Options are a wonderful way to really amplify gains, and I can't tell you how proud I am of the team on Patreon and how well they've been picking up a lot of lessons and tips. So I'm going to go through options basics, and we're going to review a whole bunch of live trades. We're going to look at companies like Coors Light, MicroStrategy, Facebook, Twitter, and a whole bunch of others. We're going to analyze real trades and show the good, the bad, and the ugly, if there even is any ugly, and analyze the outcome and expectation, look at some technical analysis, and see exactly how they go. So as usual, let's jump in. So big thank you again to everybody on Patreon to be able to share those trades. There was over 100 submissions. I pulled out the best that I thought would be the best for a learning experience. And again, none of this is investment advice. And finally, Patreon is, think of me as your Swiss Army knife in your back pocket when you have investment type questions or problems, crypto, FX, real estate, you name it. We do it all. But the real fun is with equity options. And that's where you get tremendous gains. And if you've seen some of my previous videos, you've seen that already as well. So quick refresher for those that may be new, a call option is the option to buy something. And the easy way I like to explain it is a house. Imagine you've got a house for $500,000. There's always two parties to every deal. So one person owns the house, the other person wants the option to buy the house at $500,000. One person thinks the price is going to go up a lot, so they want to lock in that cheap price of $500,000. The other one thinks that the market could be flat or tank, and they want to earn some premium. So that is a call option. Super simple. It still confuses people, but it's the easiest thing in the world. So just think of house, buyer, seller, and the trade. Now the put option is very similar, but think of it as insurance. Again, $500,000 house. Person on the left thinks, oh, the market's going to tank, and I want to lock in my $500,000 house price now by buying insurance. This would be a $100,000 option to lock in the price at $500,000 over 6 months or a year, whatever the time frame may be. The other person thinks they're getting a killer deal because they want to get the house anyway. They want to put the house at what they deem to be a good price. So remember, two parties, give and take. Call option, put option insurance, call option speculative on the price of something growing in the future. Real simple. So let's go through the option stories so far within our world. So for every buyer, there's a seller. Each has different motivations and expectations, and it's always a zero-sum game. So if one investor loses, then the wealth is transferred to the other investor. Couldn't be more simple. But always remember, it's you against your opponent. That opponent is visible. Sometimes people think they buy and sell options and it's against a machine or something else, but no, there's somebody like me on the other side. So the question is, do you want to go against me in a trade? So we'll see. If I am selling something, it means I think the price is high. If I am buying something, it means the price is low. That's all. That is the complexity behind it all. So this will look at some of the InvestAnswers community options trades. A big thank you as well to all the submissions from everybody out there. You guys rock, and I was blown away this time around. So this is the second time I've done this. And the best way to learn always is learning by examples. This series of examples covers all bases, from synthetic longs, covered calls, put options, call options, and everything else in between. So without further ado, I reviewed all the trades. Many trades have significantly improved since the last review. And as usual, let's jump in. So first of all, Coors Light. Who would have thought? So this is a beer that's apparently very close to the beach, or very close to the water, as they say. When we look in here, this is a trade by Matt W. And I must say it was quite brilliant. And the reason I'm showcasing this is because he did two things. So not only did he buy the equity at about $44.70, but he also bought short-term call options at $45, which normally is very, very risky. It's not something I condone, but he identified a bottom and a short-term play, and it's actually turned out really well. But the reason this is interesting to showcase is because it's great to showcase the difference between buying an equity straight and a call option. He's made 23% already in the stock that he bought and 150% on his call options. But remember, it's always dangerous buying short-term call options unless you can really make it stick, or you think there's going to be a big spike over an earnings release or something else. Now, what was very interesting about this play too is he saw this as a value play. He saw money going out of kind of tech and more into safer value investments, which Coors is one of those. So really well played. But let's analyze this a little bit more. As usual, we look at the chart. Now, the question Matt had was, he's making money, making very good money, both on the equity and really good money on the call option. But he's not sure how to play it next. And as always, you want to find a way to lock in your gains. So when I look at the chart, I see this beautiful green trend line that I painted here. It started at around the $34 level and has gone all the way up now to about $54. The top range you can see here is bumping up against $62 to maybe $65 if this range continues. However, the price expectation is about $60 for the stock. So I think there could be some headwinds or resistance based on RSI, based on the chart, based on the technicals, based on analyst reviews. So the safe thing to do, what I would recommend here as a potential exit, would be to sell some $60 calls for July. Take some of that money off the table or exit the trade entirely. That would be the good way to play. So hope that makes sense. Now, without further ado, let's jump into Palantir. This is the second trade from Stefano O. By the way, congratulations, Matt, on Coors. Killer job. So Palantir is one that we look at, and Stefano jumped in here. He did what's called a synthetic long, where you sell a put and buy a call. The strike is both the same at $17.50. But what was kind of weird was, I'm not sure exactly what price it was when he bought these, what date it was. I didn't have that information. And the premium he paid for the call was very high at $10. So that tells me maybe Palantir was trading around $23 at the time for the premium to be that high. So that's one of the things I don't like. Also the put, the premium was kind of low. So what I like to do is kind of have the premium for the put and the call to be somewhat similar. So it doesn't really cost you anything. When you look at also the delta from the break-even point on the call option, it's 37%. And the option premium ratio is very high at 57%. So they come out in red. So I don't like that. Now, the good on this trade is time. Lots of time value. He's got 624 days for this to exceed. I think his break-even is about $23. So I'm not concerned about that at all. The bad is the delta is very high between the put and the call. Normally better to do closer to the strike. So what I did was I created a little bit of analysis on this trade. One, I analyzed his trade based on the price today at $20.09. That was the close today. It basically was under $20 during the day, but it rose towards the end. Now the entry cost is about $585 per contract. That's a debit, and his maximum risk is $2,334 per contract. If Palantir goes to zero, of course, it's highly unlikely, but that's the worst case scenario. It's always good to understand that. And the maximum return is an infinite upside, depending on how far and how high Palantir goes, up until his expiration. And the break even is at $23.35. Now, what I did was I ran the numbers again for if we were to do this trade right now with current option prices. Palantir is at, again, $20.09. The entry cost is $330 for a net debit for the same strikes. And now it would break even at $20.80 by January 2023. So it's a little bit different, a little bit cheaper, but that was just a good way to look at it both. Again, I'm not concerned. I'm just kind of weird the way the pricing was different. And that means you must have bought the deep in the money options when the price was above $20. So next time, try to get it closer to the actual price and make sure you don't put any money down when you trade. So great job, Stefano. Let's look at the chart real quick for Palantir. His break even is at $23. This is the chart over the last 6 months. And you can see it has bottomed out in two areas here, close to $20. First at the beginning of March, and then beginning of May. But other than that, the whole sector, the whole market right now is very, very weak. And Palantir, I definitely see this as a $40, maybe $60 stock by January 2023. So great job. Interesting play. And again, for all of you out there in the stock market right now, everything's selling off. So it's not just select names. Everything Cathie Wood has been buying over the last month has gotten hammered. All their holdings have gotten hammered. So even the best investors in the world are getting crushed. So just bear that in mind. Investing is risky, but that's why I like to play the long game. So if you can pick good names and be on them and be patient, everything will be fine. So the next candidate is Twitter from Brooke. So Brooke, very well played. And as you all know, Twitter has also been beaten down heavily. And a couple of good things about this. Brooke picked an expiration date, which is 2023, so lots of time, which is wonderful. The strike price, $55, which is very close to the current price of $53.81. I normally like to buy long-term leaps that are a little bit in the money with a perfect balance between the intrinsic value and the time value. And the current stock price is under the strike price, which is not perfect right now. So it's good to have in the money, as I just mentioned. The delta from the break-even point is 25% almost. And the option to premium ratio of 21% is okay, but I'd normally like it to be a little bit lower if possible. So the bad, although let's go for the good first. The good is you got lots of time, which is great. And really, congratulations on buying the dip. Very, very well done there. I mean, your cost basis is lower than Cathie Wood, so that's really good. The only issue is there's a big climb back to a break-even point of 67 to make this trade work. And from my perspective, I would have bought the $50 calls for $13 instead of the $55 calls. So again, I'm not sure exactly when you bought this, but it's very recently. But again, next time, just go a little bit deeper in the money, just for safety reasons. Half intrinsic, half time is always good. So great job, Brooke. Now let's look at the chart. Here you can see as well, what was very interesting about this chart when I analyzed it, it retraced perfectly and bounced off the 0.786 Fibonacci level, which is beautiful. I also drew my trend line. So you can see the trend line here in green corresponds to exactly where the support level is. It's an ascending line of support. And that bounce area today is exactly off the 0.786. So you can see it was really beaten down off the highs, but a hike back up 24% to the 67 level to be break even will easily be doable in 625 days. So this is going to be a profitable trade, and well done, Brooke. So nice work. But you can see here that it's always important to look at all the different angles. Think long-term, think macro. And I know that Twitter have some very interesting developments in the pipeline. Okay, Bitcoin related, MicroStrategy. Another interesting one. This is from Peter T. I don't know if that's actually Peter Thiel. That would be cool if it was. Very famous guy. He bought back on the 21st of January the $700 strike call options on MicroStrategy for $165. The time to expiration is 625 days. And the current stock price is beaten down like everything else, $609. And I'll talk more about that in a minute. And the break-even price is $865. And the delta from the break-even price is 42%. And the option to premium ratio is 23%. It's not perfect, but it's not too bad either. What's amazing is this profit was up 300 to 400% back in Feb. And it's still in profit despite the fact that MicroStrategy has been beaten down. And that shows you a couple of things. One, the amount of volatility in MicroStrategy because it's tied to Bitcoin. So the VIX is high, therefore the option premium is extremely high. And therefore it's a very, very good thing to sell. But as usual, let's go a little bit deeper and let's look at the chart. So here you can see the arbitrage with Bitcoin. Over the last 3 months, Bitcoin has been up 57% and MicroStrategy is only up 2%. So it really is lagging behind, which means it's only a matter of time before it comes up. But then again, you could also draw a parallel with GBTC, which is also lagging behind. And it's only a matter of time before it pops. So the other thing that's interesting to note is both Bitcoin and MicroStrategy are under the 50-day moving average, which is very important to look at as well. So again, TA related, a lot of TA in this. You got to look at everything. RSIs, your trend lines, your moving averages. and compare them to other proxy-related stocks as we go forward. So mapping out the profitability of this trade, it's nothing but green. And you could sell it now and you still be in great profits. So really, really good job, Peter T. Now, also, the reason I know that I'm so bullish in MicroStrategy is because JP Morgan Crypto Exposure Basket is coming soon. And their number one holding, over 20% of that fund, will be MicroStrategy. So that's opening up real soon, and that'll start buying. And that delta between Bitcoin and MicroStrategy, which I showed you in the previous chart, will go away. So fingers crossed, just my theory, not investment advice. Now, another final note here. This is another Bitcoin related trade with MicroStrategy. This is from Bitcoin Tsunami. So he proposed an idea to buy MicroStrategy at $600 and write the January 21 covered call at $60. So the good thing about this is the cost basis is $540. So you take your $600 what you pay for it and you collect $60 immediately. Now it's crazy that a premium for that you can still get $60 for something that's, over 100% gain away. But what's really interesting thing as well, if you look at the other angle of this, I believe you'll be able to ride this all the way up if Bitcoin goes to 108,000 and still be in profits. So Patreon capitalists have access to my MicroStrategy arbitrage calculator. And here, the important thing to note, if you zoom into the $108,000 mark here, this should bring about a minimum MicroStrategy floor price of $11.38. So again, nothing but goodness in this trade. Great job and good work. And in terms of mapping out the profitability, you're covered all the way down to $550, and you can ride it all the way up to $1,200. Now we have a Bitcoin price of up to 108,000. So again, not a perfect covered call, but it could work. And you get that beautiful range. So I like the way you're thinking of the 1,200, and you've been using the model. So congratulations. So next up is Facebook. This is from Lake Packs. And the question to me was, which covered call to write? And of all the questions I got in, this was the hardest one. So obviously getting into Facebook today, looking at the strike prices of 335, 350, 370, and 395. Lake Packs was confused as to which one to write. Now, the stock price today is $320, and these are all out of the money covered calls. I analyzed them all. I pumped all the numbers through my Black-Scholes model, which you have available in Patreon Capitalist as well, and I came up with something different. So first of all, I analyzed the only one that would kind of work would be the 335 call for August, but I don't like going so far out, like selling so much time and collecting so little premium. And this is the model as to what the profitability will look like. So instead, what would I do? I picked a different one. So the call option cover call that I would do, I would prefer the July 16, 2021 call, $315 strike, and sell it for $19. You might even get $20 for it tomorrow if there's a bounce. This would be a safer covered call. And the reason why is a couple of things. One, the premium is very meaty, which is good. And number two, it's less time out. But number three, most importantly, we'll see in the chart. This is the most important thing here, is you need to protect yourself on the downside. So Facebook is high right now, up around between 320 and 330. And it broke out of a zone, which I had in a previous technical analysis chart. So you can see here, I would be nervous selling something so out of the money, because what happens if Facebook falls all the way back to 290 or 280 bucks? You're left high and dry, and your covered call isn't going to protect you. So getting one that's closer to the money with a richer premium for less time, because when you're selling them, you want the time to expire fast. That's your money. And that's what I would do. So brilliant question. The hardest one, because I had to go through a whole bunch of models and look at tons of expiration dates and strike prices. And that's the optimum one back there. So that is the July 16th, $315 call. So brilliant question. Lake Packs. Really appreciate that one. In terms of the actual pricing of how mine would work out, your entry cost is about $18.75. Maximum risk is $30,000. If, of course, Facebook goes to zero. and your maximum return is 1374 at a price of 315 at expiry. So again, you're break even at 301. And that's what I mean. You can ride this thing all the way down. So if we go from 330 to 300, you're still making money. And that's the beauty. And that's why you need to think about that different structure. So as usual, in conclusion, big thank you today. This is tricky stuff, but if you can get the hang of it and learn to be versatile in puts, calls, buying them, selling them, synthetic longs, calendar spreads, ratio spreads, condors, all that type of stuff, or just pick one or two systems you like, it's a beautiful way to generate perpetual income, which will be coming out of my investor series later as well. So big conclusion for everybody. Great work. The level of the game of everybody on Patreon has really gone up, so fantastic work. Quick reminder, it's great to see a mix of trades. You can learn a lot by using different tools for different circumstances, like something that's beaten down or something that's at a top. You know exactly what to do. You always need to buy time, sell at the money or out of the money calls, and buy in the money calls. Real simple. Don't deviate from those rules. And remember, cover calls, don't go out too far out of the money, like it was the case with the Facebook example. And if you're doing a synthetic, make sure you buy and sell at the same time. Don't have a big delta between the put that you sell and the call that you buy. You want it to be close to zero as possible. Okay? Real quick practice. Execution, not investment advice, but make sure trading with options is extremely dangerous. Make sure you succeed 9 out of 10 times before you play for real. Okay? Remember, the other person on the other side of the fence may have more experience than you, more information, more knowledge. So just be careful of that. And if you want to join the IA community, Patreon/InvestAnswers. And if you like this type of content and want freedom and lead a better life and generate perpetual income, hit the like. And don't forget to hit the bell. A lot of people are saying, oh, I missed the live stream yesterday. I forgot to hit the bell. So hit the bell too. I normally don't push this stuff, but people remind me to push it because they forget. And of course, scammers, I'm always in the black bubble, active in the comments. Be careful of them. I'll never share a phone number with you. I'll never look for anything. Just don't be scammed. They are everywhere. We are paying for a service right now that's cleaned up all the comments. It's taken 95, 98% of them away. So sometimes I see comments referring to a scammer, but then the comment from the scammer is gone. So it's automatically ripped out by an algorithm. So thank you, everybody. Be safe and see you tomorrow. Another live session. Take care.